Welcome to this explainer. Today, we're ditching the standard ledgers and spreadsheets for a second and jumping straight into an intense, high-stakes, true crime scenario, the shadowy, highly complex world of money laundering. But we aren't looking at this from the angle of street-level criminals. No, we're looking at it from your perspective, the professional accountant. Because let's face it, advanced audit professionals are constantly, and often unknowingly, targeted as accomplices to global financial crimes. The material we're unpacking today is basically your survival guide to anti-money laundering compliance for ACCA. We're going to break down exactly how these illicit networks operate and, more importantly, how you absolutely avoid becoming part of their story.
Consider this your master investigation dossier. We're going to hit 6 key areas: the anatomy of money laundering, the criminal risks for accountants, the CDD and KYC shield, catching suspicious transactions, the tension between confidentiality and the duty to report, and finally, the firm's AML fortress. Let's get right into it.
Section 1. The anatomy of money laundering.
So, to build a solid defense, you really have to understand the offense. Money laundering is, at its core, the dark art of taking illegally gained proceeds, dirty assets, and making them look completely legitimate. Think about it. A criminal enterprise generates massive amounts of cash, but they can't exactly walk into a bank and deposit it, or just go buy a luxury condo without turning heads. They desperately need a mechanism to wipe away the fingerprints of the crime. And this financial sleight of hand usually happens in 3 distinct stages. First, placement of the dirty cash into the financial system, then layering it through a bunch of complex transactions to totally bury its origin. And finally, integration, where it gets extracted as seemingly legal, taxable income. Pulling that off, that requires sophisticated systems. And unfortunately, sometimes it requires sophisticated professionals.
And look, this isn't just a local policing issue anymore. It's a massive worldwide war on dirty money. What we're seeing right now is a sequential tightening of the global net. International regulatory bodies are actively creating unified standards. They're demanding intense cross-border cooperation and enforcing highly standardized financial tracking. The ultimate goal here is to literally make it impossible for dirty assets to find a safe haven anywhere on Earth. For you as an accountant, that means the regulatory environment is more aggressive, more interconnected, and honestly more demanding than ever before. You're not just dealing with your local jurisdiction anymore. You are part of a global dragnet.
And because of that massive dragnet, the spotlight inevitably turns to the gatekeepers. Section 2. Criminal risks for accountants. As that global net tightens, the focus shifts directly onto you. Here is the absolute critical point. Failing to recognize this crime carries severe personal stakes. We're not talking about a minor fine or a little slap on the wrist from a professional body. We are talking strict criminal offenses and actual jail time. The primary risks you face fall into 3 pretty terrifying categories. First, failure to disclose. That means you suspected money laundering, but you just stayed silent. Second is tipping off. This is where you inadvertently or purposefully warned your client that they were under investigation, completely ruining the authorities' case. And third, assisting, meaning you actively help them disguise the funds, which makes you a direct accomplice. Ignorance? Yeah, ignorance is absolutely no longer a defense.
With the threat level literally this high, the atmosphere can feel incredibly tense. So the most urgent question becomes, how on earth do you protect yourself from becoming a convicted accomplice? How do you do your day-to-day job without constantly looking over your shoulder?
Well, that brings us right to your primary survival toolkit. Section 3. The CDD and KYC shield.
Customer Due Diligence, or CDD, and Know Your Customer, KYC. Guys, these are not just bureaucratic box-ticking exercises. They are literally your armor. These protocols are specifically designed to verify exactly who you are dealing with and to uncover the true nature of a client's business relationship. You have to know where their money comes from, who the ultimate beneficial owners are, and what a normal pattern of business actually looks like for them. When you establish a rock-solid CDD and KYC profile at the very beginning of the relationship, you're creating a baseline. And think about it. Only by knowing what's normal for your client can you possibly hope to spot what is completely abnormal down the line.
Once you have that baseline built, it's time to put on your detective hat. Section 4. Catching suspicious transactions.
You really need to treat your client portfolio like a true crime investigator's evidence board. You have to train your brain to recognize those subtle anomalies that hint at dirty assets. We're looking for very specific red flags here. Ask yourself, why does a simple local retail client have a wildly complex corporate structure with multiple offshore shell companies? Make it make sense. Or why is a brand new client incredibly secretive about where their wealth comes from? Or super reluctant to just hand over basic ID documents? And what about unusual cash flows? We're talking massive, unexplained deposits that do not match the client's stated business activities at all. These aren't just quirks. They're the flashing red warning lights of money laundering, and your job is to catch them before those funds are fully integrated into the legal economy.
But of course, catching a suspicious transaction immediately introduces a massive professional conflict. Section 5. Confidentiality versus the duty to report. This is the exact dilemma every accountant dreads. It is a delicate, extremely high-stakes balance between your ethical obligations and the law. On one side, you've got your fundamental ethical code, right? The one that dictates strict client confidentiality. Your clients have to trust you with their deepest financial secrets. But on the flip side, you have an ironclad, overriding legal duty to report your suspicions of money laundering to the authorities. If you spot a red flag, the law essentially demands that you shatter that confidentiality. And here's the kicker: you don't even need hard proof. You only need a reasonable suspicion. Navigating this tension is arguably the single most difficult judgment call you will ever have to make, because getting it wrong in either direction can literally destroy your career.
Thankfully, you don't have to navigate it totally alone. Section 6. The firm's AML fortress.
We need to zoom out and look at the structural fortress that has to be built around you, the core components of a firm's entire anti-money laundering program. This is the system that blocks dirty money from entering the practice in the first place. It starts with comprehensive, firm-wide risk assessments to identify any vulnerabilities. It requires strict internal policies and procedures to enforce those CDD and KYC rules we just talked about. It demands continuous training so that every single staff member knows the latest red flags. But crucially, it requires the appointment of a money laundering reporting officer, or MLRO. This designated expert is the exact person you go to the second you spot a red flag. They take on the heavy burden of deciding whether to officially report the suspicion to the authorities. They act as the final, ultimate gatekeeper for your firm.
As we close the file on this explainer, I want you to really look at the big picture here. You aren't just crunching numbers. You are standing right on the front lines against organized crime and global corruption. So, as you review the evidence we've laid out, ask yourself, are you truly equipped to be the ultimate gatekeeper of the financial system? Do you have your shield raised? And are your firm's walls high enough to stop the flow of illicit wealth? Grasping this isn't just about passing your ACCA AA exam. It is about protecting your livelihood and preserving the integrity of the entire global financial world. So, what's your next move going to be?